But a great research analyst today isn't just someone that comes up with a great idea. You have to go and tell the story, and you have to be willing to get that view out there. If you've got a view on a company transforming itself that is not in the share price, you need to be willing to get out there and see a load of investors and defend that view and explain that view.
Welcome back to Mastering Complexity. I'm your host, Owen McCall. Really excited for today's conversation. We've got Lucy Baldwin here with us today, Head of Research from Citi. Lucy, thanks so much for being here.
Great, thanks for having me.
We've got a lot of really exciting things to talk about. Obviously, the field of economic research is fascinating, all-encompassing. But I thought maybe to start, we could learn a little bit more about you yourself. So could you walk us through how does one get into the economic research industry?
Well, I would say it's probably more by accident than by design. I guess that's common to lots of careers. But when I was little, I would say my dad was quite a big inspiration for me. We used to talk an awful lot about the world and why certain companies do better than other companies, why some countries grow faster than others, and different things to do with like politics and how that fed through to economic policy. And so it sort of inspired me really to choose economics for my A-levels, which is what you study in the UK between 16 and 18. And then I was really lucky to have a great economics teacher at that point in time who really sort of opened my mind to the subject. And then I decided I would take it at university. And really it was from there that the love of the subject grew and how it impacted real world decisions, whether consumers are or aren't rational in their decision-making processes. And obviously, longer term, you realize that the impact of great leadership on companies or countries is really quite profound. So that was really, I guess, where it came from. But I was lucky enough to start as a graduate at a small company called Cazenove in the UK that was then taken over by JP Morgan. And in those days, in the early 2000s, we were lucky enough to rotate around the whole bank. So you could see how the ecosystem would fit together. And when I left university, I thought what I wanted to do was go and work in M&A or work in big sort of LBOs within the investment banking franchise. And indeed, I started in a team in investment banking. But quite quickly, I realized that there was this really interesting team sat in almost like a library doing research. I thought, oh, that looks a bit quiet and maybe a bit sleepy for me. I want the action of M&A and global LBOs. But actually, as I learned more about what they did, I realized that they were in a really interesting position because it was sort of at the nexus between institutional investors that provide capital to companies and the management teams of the companies and their boards that really wanted to understand, what they needed to do to deliver a credible growth plan to markets. And really, the research analyst has in many ways perfect access to companies and investors and is in a very privileged position. And so I could see that that was a great role. And I moved then from banking into research, and that's really how it started, albeit it's certainly not been linear, and I've had a bit of a random walk to get to the head of research role today.
Absolutely. I mean, they say, life only looks linear in the rearview mirror, and it sounds like that's sort of something that works for you. I'm curious, you mentioned, of course, your father as an inspiration early on, and then your economics professor during the A-levels.
Yeah.
Was there something that he or she did that you can think back on that really helped to spur your interest there? Was it a teaching style? What was it that grabbed you early on?
Yeah, I think it was the sort of basics of market forces and how they worked, which really just opened my mind to the subject. And certainly at sixth form college, I had two economics teachers that were really impactful in terms of making me want to take that sort of study further and to degree level. And then again, once I went to university, I was really lucky to be taught by a gentleman called Professor Peter Sinclair, who sadly passed away a few years ago. But he was a real inspiration for me in terms of thinking about economic policy, and in particular central banks and how they set inflation policies, and obviously then how that translates to interest rates and the impact that has on markets. So that for me was the sort of start of that process. And then I guess more recently in my career, I've been really lucky that I've had people like Larry Summers, who's been a real mentor to me and helped in terms of my thinking and development. So Yeah, I think like lots of people's careers, right? It's a number of people that take on those roles over time that give you advice and perspective and broaden your mindset a little.
Excellent. And you've been now with Citi for a few years, and my understanding you lead quite a large team. I'm curious if you could tell us a little bit about how you orchestrate that, and do you find ways or strategies that you can sort of provide that inspirational leadership or mentorship that you received onto your team itself?
Yeah, I think that one of the few positives that we all saw from COVID was, things like Zoom becoming so much more widespread, right? And this sort of big step forward in terms of the digitalization of certain economies, in particular the US, that, in many ways, and that certainly perhaps lagged one or two others in that sense. And for us, that connectivity, that opportunity to convene different groups of people who are all over the world. I mean, I think we've got research analysts in over 30 different countries around the globe. So bringing together different economists to debate with the healthcare team, how is AI going to impact drug discovery? How is it going to impact productivity, US economic growth? Having those debates, discussions together across the globe is really, really important. And that sort of is easier to facilitate now. You're right that the team is quite large. We've got about 850 analysts covering all major asset classes globally. And we obviously look very bottom up fundamentally at a number of companies, but we also then marry that up with that top down approach. And I think the real advantage that we have is that ability to have, a group of company analysts say to the economists, hey, look, have you heard and seen? This is what's happening in the US tech sector. These companies are doing this. These companies are hiring. These companies are firing. This is shifting. This is changing. And then for the economists to say, well, actually, what we think is going to happen next from a policy perspective is this. And how does that then play out in terms of corporate strategy and earnings and growth? And that ability to marry up the top down and the bottom up, I think, is critical to what we do. So a lot of what I try and do is convening of different groups of people together and helping join the dots in different ways. So I do spend a lot of time on the road, going around the different countries where we're present, seeing clients, seeing our own teams, thinking about what are the big themes and the topics that you need to come together on and where you need to have that debate and discussion. Clearly AI is occupying a lot of people's minds and thoughts and attention right now. And I think, again, like our ability to bring a commodities team, a group of economists, and then a group of sector single stock analysts together, as well as, say, credit research, to really think about how this comes full circle over the course of the next decade is really critical.
And I mean, it sounds like you're dealing daily with just an incredible wealth of data points and knowledge. I'm curious, how do you go about transforming these data points into compelling narratives that are, resonant for the different clients that you have, or the presentations you're about to give? What does that process look like?
Well, and you're absolutely right. That is something we've spent a bit of time in the last 3 years grappling with, and the way that information is changing in the world. I remember my brother was a pharmaceutical drug rep years ago, and he and I used to talk about how, that role has shifted, right? Doctors don't necessarily need to see today drug reps to understand what drugs they will or won't prescribe.
Maybe they shouldn't.
Yeah. And, the same is true in almost every sector, right? And, we may talk about this in terms of how AI will shift jobs, white collar, blue collar, etc. But I think, for us, the types of research that we produce, really what clients care about. We obviously serve a very broad range of clients, from pension funds, hedge funds, asset managers, ultra high net worth individuals, family offices, etc. What clients really want to understand is, where are we different from the consensus? And that is true whether it's a view on, is the US going to see out of consensus growth, right? Are we going to grow faster or materially slower than is expected? Are we going to see more rate cuts, less rate cuts than is expected? Is company X going to beat earnings by 20 or 30% because it can rip out a big chunk of its cost base? And we've seen something that the other people haven't seen across the street. It's those out of consensus views that can help generate alpha that the clients want. And for us, you have to obviously cover an awful lot to be able to find those things, right? You can't just find those things and
Right.
ignore everything else. And so it's how do you then pull that out and package that up in a way that's accessible, bearing in mind in today's world you compete with information and data from so many more different sources, and there's so much more free information out there than, if you like, paid for written research content from investment banks. So, we're very well aware of that. And I think for us, like evolving things like our own podcast series, we've got a brand called Must See, and we write a lot of product under that heading, which is the big picture product, which is where a lot of the collaboration happens. And one of the other big changes that we made to help facilitate this whole process of like making sure that the best stuff rises to the top, and that we're leading the debates on topics and themes that matter, is we created a brand called our Super Sector Reports. And so really that is taking the concept that the sectors across the equity market are bleeding into one another, right? And it's not really the case that you've got like, here's internet as a discrete sector, or here's, industrials as a discrete sector. Technology is basically infusing across every single sector and changing the types of companies that are in those sectors. And so really creating a super sector structure across bigger parts of the world has enabled us, I think, to be more relevant in terms of identifying themes earlier on and starting to write about them.
Right. And you just gave a presentation for a company just a few minutes ago, and it was really fantastic. But what stood out to me was your recall and your ability to answer questions on the fly. This is maybe self-motivated, but maybe it's relevant for the audience out there. Do you have any tips and tricks of how to keep all of these competing data points or narratives top of mind? Anything you've learned along the way that helps you be able to dial back into these things?
Yeah, it's and I would say I'm not naturally that good at it, to be honest. I love listening to podcasts and reading stuff. But for me, I'm a bit old school. I probably need to write stuff down. I have to make notes. And I think trying to distill things back to a couple of key points is always really critical, because most things come back to one or two really salient points. And what I always say when I look at what the analysts are writing is, what are they saying that's really different? And what is that based on? Like, why is there that different view? I'm really just constantly asking that why question, why do you think that the US economy may slow more materially than the consensus? And really just pushing it to the next level, making sure I just understand it. Because I think if you try and learn stuff by rote without really understanding where it's come from and how it applies, then I think it's difficult. And just bringing things to life with like real world examples of things that are visual, I think makes a big difference as well, if you can translate it to that.
That makes a lot of sense. Now, you mentioned an old school approach. I thought maybe we could switch things up a bit and go new school. Let's talk a little bit about AI. Of course, it's on everybody's mind these days, and I'm sure you're approaching it from a research perspective from many different angles. What are some of the most interesting things, data points, trends that your team is looking at, and what can we learn in this space?
Well, as you say, there's been a lot of excitement. Some may say hype from AI. If you look at the US equity market this year, the S&P 500 is up about 15% so far. And broadly, if you sort of dissect where that's come from, about a third of that has come from one stock, which is at the forefront of chip design. About a third of that has come from the rest of what is known as the Magnificent Seven. And then another third of that has come from the other 493 names that make up that index. So you can see very clearly that AI and technology is a big driving force around what's happening in the equity market and why it's so buoyant. And clearly, when you look at all of the sectors in the US equity market, those technology-driven, AI-driven sectors are really the two big spaces that have massively outperformed. Admittedly, most of the market is up. Most sectors other than real estate are up this year. When you then sort of look under the hood, if you like, and sort of see what's really driving that, I think in its early stages, you can see that the big technology companies, the hyperscalers that are out there building, buying up, building data center capacity, they know that for AI to really fulfill its potential and achieve everything that people want it to achieve for good, clearly you need power, right? And you need the ability to really take compute to the next level. And I think power is likely to be the big bottleneck, and that's therefore occupying a lot of attention. I think if you then sort of think about what's happening in power markets, Very broadly in Europe and the US, there's been very little growth in power demand in most of the last sort of 5 to 10 years or so. It's been pretty stagnant, pretty flat. And actually now, not just driven by AI, but a range of other factors too, right? Because in fairness, even before ChatGPT, it would be to say that data centers were important.
Sure.
And that data was important. You've also got, in addition to the fact that some of the efficiency gains that were being made have started to peter out, you've definitely got this sort of broader growth in electrification. Obviously, we think about electric vehicles, but it's even broader than that. That's massively driving incremental power demand. And then if you look around the world, government policy-wise, right, whether it's the IRA, the Inflation Reduction Act, whether it's the CHIPS Act in the US, or some of the equivalents that are in place in other countries, that is spurring a massive boom in then investment, right? Some of that is subsidies, some of that is then encouraging private companies to commit capital and to spend. And that is clearly very interesting, right, in terms of what's going on. It's creating a lot of growth. I think it's helping sustain the US economy. It's one of the reasons why the US economy hasn't really slowed, I think. So those are some of the big trends around AI, that you've got this sort of step change from seeing no growth in power demand to really probably around 2.5% growth a year in power demand from here on in, and probably about 90 basis points, 100 basis points. A lot of people, if you look at the data that's out there, the consensus data, that seems to be what people think is attributable to the AI piece in terms of data centers. And I think, that's going to mean that an awful lot of changes are going to have to happen in terms of utilities companies. How do we get that magnitude of power to where it needs to go? And I think clearly data centers, sort of by definition, these big hyperscale data centers, what do they need? They need really significant amounts of continuous power. I mean, the basic stat that I think a lot of people talk about is that a ChatGPT search uses about 10 times more power than a Google search, right? And that, I think, just conceptually helps you understand what this leap forward tech-wise is really doing in terms of those power demand credentials.
And you mentioned the CHIPS Act. I'd love to jump into that a little bit. In my understanding, it's sort of a move to bring the production side of the AI chip development a little bit more back onshore in the American territory. Could you tell us a little bit about the goals of the CHIPS Act and what you see the impact potentially being?
Yeah, and I think a lot of people are also debating, like, how successful has it been, right? Because as you say, it was exactly designed to do that, sort of broadly $50 billion worth of spend to try and create incentives for companies to build and invest onshore in the US in manufacturing facilities. I mean, again, to sort of go back very briefly in US history, there was a separation essentially of the design and the manufacturing process that happened many years ago. And the US broadly retained a lot of the design capabilities onshore in the United States and allowed manufacturing to be outsourced to, i.e. lower cost locations during the era of globalization. And now the microchip, the semiconductor, has a very complicated supply chain, at least at the absolute cutting edge, and is now much more widely understood. More than 95% of the world's cutting edge chips are produced by one company in Taiwan, right? And that naturally created, we saw during COVID, potential risk around supply chain bottlenecks when things weren't moving. And again, in truth, right, when you look through COVID, every year, the numbers of chips in the world produced continued to go up. It was just the type of chips that were being produced weren't necessarily aligned to where the demand was. And hence you had things like delays in being able to buy a new car because chips for the auto industry weren't readily available because the demand shifted so quickly and in a slightly unpredictable way relative to expectations. And so that obviously got a lot of people thinking about this chip ecosystem and what does it mean if there's that level of vulnerability, and given the geopolitics, the risk that could be inherent if for any reason you were to have a situation where the world's biggest advanced manufacturer of chips were not to be online. And so
Right.
I think that has been a big theme and a big subject. But you are definitely seeing, if you think about the success of the CHIPS Act, that investment is definitely happening in the US. It is creating domestically a bit of a boom there in terms of job creation, etc. But I would say it's also worth bearing in mind that China is still doing a phenomenal job in terms of investing itself and creating opportunities for investment in China to be at the cutting edge and to catch up with the cutting edge of chip manufacturing. And again, we've seen tremendous progress there, whether it's in terms of mobile phone technology or other things more recently, where I think China has surprised the West by how quickly it's been able to catch up.
Yep. Yeah. Absolutely. And I mean, looking at also China positioning itself internationally, I mean, I was just watching, I don't know if you're a football fan yourself, but the Euro Championships, if you looked at the advertising that's happening, it's almost dominated by Chinese companies looking to expand into Europe and internationally. So if you mentioned it already, the geopolitical implications or, impact that this could have. Before we get into that, I wonder if we could go back to energy. Now, the conversation around renewables, nuclear, more some of the old school production. What can you tell me about how these data centers are being powered globally?
Yeah, I mean, I think it's fair to say that all these big hyperscalers want to see, for sure, more and more renewables powering the data centers, because all these big companies, all the big tech companies that are, US listed, have typically got targets in terms of getting to net zero from a carbon emissions perspective. So they would love to do more of this in a renewable fashion. However, there are massive challenges to that. I think if a big data center today is probably 150 megawatts of power, that's like a small to medium-sized city by most people's standards, right? To power that, you probably need about 1,500 acres worth of site to put a load of renewable infrastructure in. And in truth, even that's not ideal, because as we all know, if the sun's not shining or the wind's not blowing, that power is intermittent at best. And so you haven't really got the battery storage solutions yet that are in place to enable, even if you had a site of that size, to enable that to work as seamlessly as you would like it to. And so the challenge therefore means that you're going to have to find a hybrid solution. So you're probably going to have at least 50, if not 60% of this being natural gas driven, and then maybe something like more like 40% being renewables driven. I think the other complexity is nuclear, as you alluded to. We've just seen one of the big tech companies spending $650 million on a site whereby basically it's going to be powered by the nearby nuclear power plant. It's the third biggest nuclear power plant in the US. That's an interesting investment because it shows that intention, and clearly nuclear could be part of that net zero solution. But as we all know, there's a tremendous amount of NIMBYism, not in my backyard, around nuclear. And the bar to build and operate a new power plant that's nuclear is incredibly high, right? Safety is clearly paramount, massive hurdles. There's also not that many people from a skill set perspective out there in the nuclear industry anymore that know how to do that. Certainly most of the people that were in the previous nuclear power plant boom are now retired. And so there's a number of obstacles, and not just, permits and finding a site that's acceptable, that make nuclear a challenge to be as much part of the solution as perhaps many would like it to be. But certainly for existing nuclear plants, there's going to be significant interest from a number of these big tech companies that are going to want that enablement to power.
Right. And I've seen some headlines where it looks like, too, in terms of appetite, it looks like China is also looking quite aggressively at nuclear development domestically. Do you have anything to say about that?
Yeah, and I think a lot of people have often been confused by maybe what China's strategy is around decarbonisation and net zero. People say, well, they're still building coal-fired power stations, but yet they're an absolute leader globally in EVs and a number of decarbonisation solutions across the whole spectrum, right? So yes, I think they will continue to look at that, and part of the model that they have enables those things to move forward much more quickly than the types of model that governments tend to run with in the West. So yeah, I would suggest that there are so many things that China has that probably means it's going to be at the forefront of AI innovation in terms of the way their entrepreneurial class come together and innovate, their access to abundant, cheap power, certainly relative to other parts of the world, e.g. Europe, And I just think if you look at the innovation they've had in their own tech sector in the last decade and how quickly they've advanced, if you look at what they're doing from a chip perspective, other advanced manufacturing, not to mention the absolute huge abundance of data, not just quantity, but quality of data that they've managed to bring together. They're certainly, in my opinion, therefore ahead of the US in terms of the data race and the digitalization of their economy. I mean, you only have to go to some cities in China and you see it and you feel it. It's very different to most other parts of the world.
Absolutely. Can you talk to me then a little bit? I mean, this links perfectly within a conversation on geopolitics and positioning and that kind of thing. What can you say about how China is working to brand itself on the global stage? How are they going to connect their domestic tech companies internationally? Do they even want to? What have you seen in this area?
Yeah, I think China rightly has had an incredibly successful export-driven strategy, right? And part of that export-driven strategy has been what has helped lift several 100 million people out of poverty. It's been the greatest success story from that perspective in history that we've ever seen in terms of the, growth of the middle class there. And I think, in contrast, for countries like India, they don't have that manufacturing base to help lift such a significant proportion of their population out of poverty. And so the roadmap for growth is more complicated. I think for China, where it's at in terms of its evolution, is such that maybe that old manufacturing playbook is being challenged, right? And as we've seen, other countries like the United States are setting up their own manufacturing in what they consider to be critical sectors that they want self-sufficiency in. And China itself wants self-sufficiency. So, I suppose like all of us, China wants its cake and eating it. So that is very clear, right? They want to be able to continue to export and have influence over the rest of the world. And they want to be able to be at the cutting edge of all new technologies. And they're well placed to do that. But they also are very well aware that they need the rest of the world right now for certain imports and certain things. It's a bit like when you're asking me about the CHIPS Act. Undoubtedly, it has impacted the flow of chips or manufacturing equipment into China, all the restrictions that have gone in place there. But again, in this sense, it pushes China to be yet more innovative and creative, and it pushes within China the government to come together and to support local entrepreneurs to say, look, we need to be able to produce these ourselves. So you've got a very complex web of interconnectedness globally, right? And again, the US is also pretty reliant on China for certain critical things, parts of healthcare, right? Antibiotics. There's a tremendous amount of flow in many directions. So I would say, although lots of people say, but look at Russia, Ukraine, that's going to make China think we need to be very careful how we portray our ambitions on the global stage, because look what's happened here with Russia and with Russia and Ukraine. And I think what's critical there is just this concept that, that the world has sort of disconnected as much as it can Russia from the financial system. Again, you can debate how successful parts of that have been and the sanctions, but you can see the clear intent, and Russia's economy has massively struggled if you look at it over a 10-20 year period as a consequence of a number of decisions that have been taken. So I think when I look at it, it's a very complicated set of geopolitics, but I think the world has to sort of figure out this new world order. Clearly, China is very much seen as a leader of the global south. I think perhaps the BRICS acronym that we all used for a long period of time, Brazil, Russia, India, China, that has changed. But I do think the global south are a group of countries that will have some form of cooperation between them, albeit they're pretty idiosyncratic. They've got a lot of different objectives, different ideologies, and different ambitions. But undoubtedly, a number of them look at the West and say, look, this isn't what we're trying to be, this isn't what we're trying to do. And so I think understanding that thought process is really, really important. And I think a Western view of China that they're just copying US technologies with a lag is lazy and inaccurate.
Now, you mentioned a new world order, and this is a term that, has many, has the impact of different impacts on different people when they hear this. But going with that, I mean, you see even challenges to things like the US dollar as the reserve currency in terms of when it comes to oil, in terms of when it comes to what China is doing internationally. What do you see happening in this space? Is it a real challenge? Is it sort of smoke and mirrors? What's your take there?
Well, and as you say, there's a lot of discussion around, certain trade being settled in other currencies like the renminbi. In truth, I think our view would be that there's not really anything out there that rivals the US in terms of reserve currency status for all of the challenges the US has, maybe politically, in terms of democracy, in terms of, its place in the world, which is clearly shifting. And, one of the big questions that everybody has for whoever the president is when we get to the end of this year is what role do they want the United States to play from a foreign policy perspective? What will be the response to Ukraine and Russia? What will be the response in Gaza and Israel? And what will be the response in what is more of a, some people are terming more of a Cold War with China? How will that move forward? Given those interconnected nature of relationships that I mentioned. So I think there's an awful lot to sort of happen over the course of the next year or so in terms of the roadmap forward. But I think when you think about the geopolitics in this new world order, what is very, very clear is around the world, when you look at all the elections that have happened so far this year, half the world's population going to the polls, is there's a huge number of people that feel as though globalization didn't work for them. And those people feel that they've had jobs displaced and that the offset that they may have had in terms of cheaper products that they've been able to buy doesn't offset the fact that they don't have a proper job anymore. And whether that's somebody that worked in a car plant in Germany who's now working as, a ride-hailing app driver, without all the benefits of being fully employed and sick pay and all those other challenges that some of those types of informal work have. I think that's what you're seeing in some of the votes that are being cast across the world at the moment. And the challenge for the political system is being honest enough with the electorate around how little fiscal space most countries have, whether that is the United States, which has 100% debt to GDP, it's got a 7% deficit. And those things aren't really sustainable, certainly not if they keep growing. They need to be addressed. But being honest about, well, look, this is what we can afford at the same time as attracting the votes, right? Because a lot of the populist parties on the far left and the far right around the globe that have picked up a lot of voters are picking up voters often with policies that aren't totally economically thought through, in my opinion. And that can sometimes be the challenge, right? And you've seen that in parts of the world where we've had bear steepening events in the UK, we've had challenges in the US in terms of how their treasury market works. And to your point, the US treasury market is $27 trillion. It's biggest, most deepest market in the world. It's always seen as the safe haven asset, along with perhaps the yen, the Swiss franc, gold, and one or two other things. And more than 70% of the world's central banks will hold US treasuries. And so I don't see that there's anything that is going to stop that. There's a lot of evidence to suggest that the FOMC, the Treasury, will always come to the rescue of that market. It's the most important market in the world, and we've seen evidence of that happening. And so I don't think there is any near-term pressure there, but having a set of very coherent policies around what are you going to spend versus what are your tax receipts for all of these governments, the US included, is going to be really, really critical, because the markets will hold these governments around the globe to account.
And now this sort of return to something of more isolationist focused policies, of course, a massive topic in the US. Looking around the world, is it also on the docket for a number of other jurisdictions? We've seen Mexico, Indonesia with big elections so far, and many more to come this year. What's sort of the temperature internationally for this sort of rejection or just moving away from globalization as the ultimate goal?
Yeah, I think we need a new form of globalization, clearly, because the cooperation and the interconnectedness is so great. But what that looks like is difficult, because all of these countries are trying to shift to these higher growth sectors, right? You've got to reskill, retool your workforces. And on top of that, there's a massive debate around how many jobs are going to be lost through AI. Some people say 30%, some people say 50%. Blue collar, white collar jobs could go in a pretty short time frame. What do those people do? We all know that work is a really key part of fulfillment for most people. It's not just how you earn your crust. So even if you introduce things like a universal basic income, it's not going to solve all of the problems. So there's an awful lot for governments to think through at the moment. And to your point, these issues aren't just in the US. It's not just about the US perhaps turning more inward and being more US first centric in its mentality. But there is a cost to that. And I think that's what markets grapple with, is does that mean it's inflationary if everybody builds their own versions of all of these key industries, and if people don't outsource to lower cost, more specialist providers in certain areas? 101 of economics, going back to my time at school and university, was all about the benefits of specialization. And if you don't have that anymore because every country thinks it's got to do everything, that is a very different dynamic to the one that we've been living with for the last 10, 20 years. But you do see that, in the trade numbers where trade growth runs below GDP growth, certainly more recently. And you see that in the shifts in the trade patterns in terms of who's trading with who. And there's definitely that focus of people being much more aware that they don't have an over dependence on any one company or any one country. And I think a lot of people are referring to that move more recently to the China plus one strategy. To your point, clearly Latin America, Mexico, a massive beneficiary, and will clearly be an opportunity for the US to have relationships there and possibly also help manage immigration, which is a massive theme around the globe when we think about elections and policies. So I think, yes, in short, you are seeing the same set of themes come through. If you look at the UK, if you look at Europe, I think for Europe, it's the complication is how you fund a big part of your transition, right? How you fund decarbonisation at the same time that you're trying to achieve energy security. And if you can't do that, partnering as much with China as you have in the past, China's been a massive source of lower cost solutions for that. And I think for China, they have a huge number of emerging markets that will want access to mass market products that they're unbelievably good at producing, whether that's EVs, whether that's mobile phones. And so for huge swathes of the world, China's going to become an increasingly important trading partner. But the trading relationship that they may have with the US and with Europe, obviously continues to change in the current geopolitical environment. But that does provide Europe with a bit of a challenge as to how do they finance that transition themselves. And again, as we've seen more recently in their own elections, there's an awful lot of angst in Europe about getting spending, getting growth back into key parts of Europe, and where are the good quality jobs going to come from, and how are we going to achieve that?
Mm-hmm. Mm-hmm. Now, crafting quality policy, there's an art and a science to it, of course. Looking ahead with a time scale, 18 months or 2 years, is there anything under consideration or in the drafting stage, and from a policy perspective, where you see in different jurisdictions that you think this might be a key to sort of setting the tone, setting the stage for what the future of international trade might look like?
Yeah, I think there are things that are out there that are being discussed and debated by investors and clients that I see. I'm not entirely sure they are good news, but for what it's worth, I'll share with you some thoughts that I often hear about the US, which is that let's suppose we have Trump coming into the White House later this year, post-election in November. Would he, given his nature, which is perhaps more transactional, would he look to have a relationship around the world where we go out and we say to different countries, look, it's a 60% tariff, or can you help me fund longer term some US debt, right? Because again, to your point, the fiscal situation in the US, the debt position in the US, albeit, debt to GDP isn't at Japan levels, it's definitely a problem in terms of like allowing it to grow. And so how do you try and solve for that? Clearly the US would have loved to have termed out more of their debt when rates were very low, but that risk of longer term rates being much higher than previously experienced is a very real risk. And so I think, possibly what that administration would look to think about is how can we negotiate on more of that basis? Whereas clearly, again, simplistically, Biden's approach seems to have been much more kind of like, let's put some subsidies in place to incentivize the industrial production to happen back here. And his approach is much more, we need to find a way to basically spend more money in certain areas, but he wouldn't be cutting taxes, he'd be more likely to be raising them. Whereas Trump obviously wants a way to fund some tax cuts, and potentially in that scenario, is that how he achieves those tax cuts in a fiscally sustainable, viable way for markets? Is it through hoping and trying to achieve some kind of revenue from tariffs versus thinking about the debt position of the US? Clearly, there's a lot in there to debate and discuss, that it's very far from a foregone conclusion. But I can see that you may enter a world where there is more negotiation bilaterally. And the big question is, what are the big multilateral, broader relationships that can come through? The Global South is obviously one. The G7, what's that role? What is the role of some of these big organizations that bring together consensus and create cooperation? Because my goodness, do we need some of that, particularly around some of the topics and the themes that you and I have talked about, whether it's AI and cybersecurity and data and what we can and can't do with all of those things. You need to have a forum to bring these big companies and countries together. And let's not forget, some of the companies are becoming bigger and more dominant than countries today.
Totally. Now, I'm wondering if we could pivot back to the research machine that you're heading. Can you give us some insights into how you develop methodologies that are able to parse through the millions of data points that your team faces on a daily basis?
Yeah, it's one of the challenges we always have in any research department, right, is how do you leverage what you've got so that you're worth more to your organization and clients than your sum of the parts, without stifling creativity? If I'm too prescriptive, top down on this is the way we need to approach everything, that will stifle creativity. And so I want the analyst's flair and out of the box thinking to come through. But at the same time, right, to really get the leverage out of the system, if we've got an out of consensus view, let's just say on China, on maybe their consumer, we want to really be able to show clients, well, this is how it looks when we run that view economically through the 3,600 stocks we cover around the globe, right? So we have to have some elements of trying to standardize processes so that we encourage people to leverage the house view. Also, if you're an analyst, right, covering a company in Europe, and let's just say that that company buys a business in Indonesia, I don't want you as an analyst to have to go and do all of the work understanding what's going on with the Indonesian consumer. They need to get on the phone or the Zoom, talk to the economists and the analysts that are on the ground in our team in Indonesia, and leverage that. And it's about that leverage rather than recreating the wheel every time that we try and put in place to scale things. And also, the era of on-point forecasts has kind of shifted, right? It's harder and harder to say, at this point in time, this index, this stock, this commodity is going to hit this price target. Now, obviously, we have those things, but we're increasingly asking people to say, given the range of outcomes that are out there and all these different things that are going on in the world, here's how we think about bull and bear cases in these different scenarios, so that more of our clients can understand how we think and not just this is the output and the conclusion. So that's a lot of what we try and drive towards. I mean, to go back to your opening questions to me, right, the world has shifted in my 20 years a lot. And when I started, I covered 10 stocks that all had UK-only businesses. They had UK equity investors that made up their shareholder investor list. That was it. It was a very small amount of information to get your head around as an analyst. Today, analysts are covering companies that are globally competing for profit and globally competing for equity capital. And so the amount of information you have to assimilate if you like, in the numerator and denominator to work out where things are going to go has exploded. And I think that is one of the hardest things. We do have an innovation lab within our research department, which is a group of data scientists that the analysts can go to, and they can say, hey, I've got a theory, I've got an idea, can we stress test this? Can we get some data on this? I think this is happening. Can you prove it? Can you disprove it? And that's been a really great source because, as you might imagine, in a group of 850 people, you've naturally got some people that are really embracing of multiple data sets and are naturally wired that way. And then you've got a whole cohort of people who perhaps aren't wired that way, right? It's not how they've got to be where they are today. And you need to try and take it to them and package it for them in a different, more usable format.
And have you noticed in your time in this space, have you noticed a shift in attitude or appetite on the client side in terms of, you mentioned sort of the focus now with your team to really understand things at a more holistic level. Is that also true for on the consumer side and the clients? Are they looking for more nuanced perspectives, moving away from, as you said, just, price point predictions, this kind of thing?
Yeah, so you're thinking about the underlying client base and what they need and what they want. Yeah, I think it's interesting. I mean, it varies, right? We serve such a broad group of clients. Many of them have their own in-house research teams, and obviously they then interact with our research teams. A lot of them are looking for proprietary data sets from different sources. And again, a lot of that's quite regulated in terms of what data you can use, because clearly sometimes if the data's too good, it borderlines on, not being usable, as it were. And, I think we've seen that, things like satellite imaging, right? If you can see everybody going in and out of a particular store in the United States, you can pretty accurately maybe forecast exactly where that footfall's going to be in that quarter. And where that line goes has been a big debate, I think, in the industry. But there's no doubt that the data sets that clients are using is increasingly sophisticated. And I would say probably one of the areas that has become, I guess, less of a buzzword, ESG, clearly that has re-evolved as a narrative, and it's now much more about resilience and security and supply chains. But I think in that space, biodiversity and the intersection between biodiversity and climate and what companies are doing on those two fronts, particularly where it's relevant to their industry, that is really critical. And the amount of data that those things are throwing out there is huge, right? And for a lot of the analysts, buy side or sell side, being able to decipher that data and turn it into something meaningful is really critical.
That makes a lot of sense. If we shift gears just slightly, outside of lucking out with some, fantastic professors or a very supportive father, as in your case, do you have any advice for young people looking to get into the economic research industry? How would you advise them in terms of putting the pieces together to one day end up in a career in this space?
Yeah, I would say the great thing with research is it actually doesn't matter what you've studied, right? We have people in our research department that have come from all backgrounds. Yes, we have people that have come through the academic economics route and have done PhDs in economics and come in that way. But we've also got people that have been out working in companies, working in corporate development, running divisions of companies with a very different background coming through. We've got people that study everything from music and the arts and languages, right? The brilliant thing about research is it's a very kind of open to all environment. If you're curious, intellectually interested in how the world is going to shift, that's what matters, because it's all about being able to forecast how an industry is going to change or how a sector or an asset class is going to shift. I always go back to things like Porter's five forces, right? It's fairly basic, but how are revenue pools and profit pools going to shift in a given space over time? And how does that compare with what the market's pricing in today? Which are the companies or countries that are going to win or lose structurally, strategically, and why, versus what the consensus is? And I think if you've got a mindset that finds that interesting, whether it's from a macro big picture or a more micro bottom up, then I think research is a phenomenal place to start. And my advice to people is always to try and get as much experience as you can, whether that's through your network where you can ask people, talk to people about what opportunities exist. There's loads of information that you can absorb today. I remember when I was starting out, I didn't really know what research was, and there wasn't that much information out there. There's so much more publicly available content that is out there and available for people to digest, to understand if it's something that interests them or not. But a great research analyst today isn't just someone that comes up with a great idea. You have to go and tell the story, and you have to be willing to get that view out there. If you've got a view on a company transforming itself that is not in the share price, you need to be willing to get out there and see a load of investors and defend that view and explain that view. And who knows, hopefully the board of a company listens to what you're saying, likes your idea, and thinks about implementing it if they weren't already, right? And those things can then become self-fulfilling prophecies, which is really special and powerful. And I also think there's a really great role, again, for the economists and the strategists to really shape where policy and markets go, because they'll have a view and opinion on what's happening in a country or in a particular asset class that, again, if they engage with the right market participants, can really shape the outcomes for a better future. And so I still believe pretty passionately that socially what we try and do in research is a real positive for society at large, and at least it's an education process. And so I think if you've got that mindset that appeals to those types of things and you think that sounds exciting, then it's trying to obviously get yourself into a position where you can go and learn from people that are really great at it. Because certainly from my perspective, in the early stages of your career, there's a lottery element as to who is the person that you're sat next to day to day. And I always say to people, if you're not learning from people, if the learning curve's not steep enough, that's when you've got to try and be really proactive to move, because early on you've got to keep the learning curve really steep.
Outside of the box thinking, contrarian viewpoints, following that thread, looking around, are there any maybe asset classes or arenas that you think might be worth a second look for people looking internationally at places to invest or to look at?
Yeah, look, I think when you used to do a quick whistle-stop tour, broadly we've been pretty bullish on equity markets and we've been more cautious on credit markets. Because we've sort of felt that's more of the hedge. Like, we've tended to actually be quite constructive in our view towards government debt, and commodities we really, really like. So areas like gold, copper, we think have got massive potential from here. So when I sort of look around the globe, there's a number of like equity markets that are interesting to us and show significant upside as we go into next year. The China market is a big question mark for a lot of investors, and I think if you get that right and that call right, the market is clearly cheap relative to history, relative to other markets. It's cheap for certain reasons, as we know, because the confidence isn't there in that market yet for a whole range of factors. China is obviously trying to, like many countries, find its new growth model, right? It's transitioning away from having an economy that was 25-30% property dominated. And it's shifting to new growth sectors, including chips, AI, advanced manufacturing, etc. And that transition is really important for them. And if they can make that work, then there's tremendous upside. We still see China growing at 5% a year as we look into next year. But I think that opportunity there is still significant. And I think given AI, there's a tremendous potential. But there's a lot of confidence that needs to come back to that market for international investors to feel confident to step back in. And right now, I think that's the big question mark. So I think that is probably, given it's the second biggest economy in the world, and arguably, other than the US, it's got the most opportunity when it comes to capital markets. That is probably one of the big calls that investors need to consider and get right for the next few years.
Now, there's a few people out there in the audience that will kill me if I don't seize this opportunity. So I got to ask, Bitcoin, cryptocurrency, Web3, are these topics on the radar for your team? Do you have a perspective on the industry?
So we have a team that cover digital assets, and we do publish models for Bitcoin and Ethereum. So we show people a different range of outcomes under different scenarios. And really for us, we started to do that because we had more clients coming into us saying, I need to understand this. Is it an asset class that is competing with other asset classes? Is it a hedge for certain things? Or is it actually, just a replication of other higher risk, higher volatility, potentially higher return assets, right? And people wanted to understand really what it was. So we have started to have some digital asset research that we published from within actually our asset allocation team and our quant macro team. because there was that incoming demand from our clients to understand what it is.
Lucy, it's been a real pleasure speaking with you. I'd love to pick your brain for hours, but I'm mindful of the time. Thank you so much again for stopping by with us. It's been fantastic.
Thank you very much for having me. I've really enjoyed it.